how scammers stole $560 million and got away with it. In today's video, we'll dive deep into the major changes in fraud liability for 2025. From cutting-edge fraud detection technologies to groundbreaking laws reshaping consumer protection worldwide, we've got it all covered. Let's get started. Overview of fraud liability trends. The world of fraud liability is rapidly transforming. Fraudsters are now using artificial intelligence to outsmart systems, while banks are heavily investing in advanced fraud detection tools. Governments and regulators are also stepping up to ensure consumers are better protected. But what exactly has changed? Let's break it down. In 2024, we saw some significant milestones in fraud liability across the globe. These changes are shaping the financial landscape and setting the stage for what's to come in 2025. The UK's new app fraud compensation rules. Let's start with the UK. In October 2024, the UK introduced new app fraud compensation rules. Here's what you need to know. These rules require banks to compensate victims of AP fraud up to £85,000 per case within 5 business days. This applies to individuals, micro-enterprises, and charities, as long as they haven't acted with gross negligence. But there's a catch. Many people aren't even aware of these rules. In fact, a recent survey found that only 29% of UK adults knew about them. And then there's the optional £100 excess that some firms can apply. For scams under $100, victims might not see any compensation. While these new rules are a step forward, prevention is still the ultimate goal. Innovations like the confirmation of payee system and scam signal, a collaboration between banks and mobile network operators, are helping detect and stop fraud before it happens. Fraudsters are also adapting by using new techniques like deepfake audio and video, making scams more convincing than ever. This highlights the need for constant vigilance and innovative solutions. Fraud liability in the United States. Now, let's move to the United States, where the conversation around fraud liability is heating up. Unlike the UK, US laws don't require banks to reimburse customers for scams involving authorized transactions. However, changes are on the horizon. The Protecting Consumers from Payment Scams Act, introduced in August 2024, aims to close these gaps. While this bill faces opposition from banks and might take time to pass, it's clear that consumer protection is gaining traction in the US. Banks will need to invest more in fraud detection technologies to stay ahead. We also can't ignore the influence of technology companies. Could big tech play a role in shaping the future of fraud liability? With advancements in biometric authentication and blockchain, the possibilities are endless. Europe's PSD3 and shared liability model. Next, let's head to Europe, where PSD3 is set to redefine fraud liability across the EU. The European Parliament's amendments go beyond just banks and PSPs. They now include telecom providers, e-commerce platforms, and even social media companies under a shared liability model. While this is a bold step, critics argue it could raise compliance costs and create legal ambiguities. What do you think? Should platforms like social media companies share the burden of fraud liability? Let us know in the comments below. Another potential game changer is the use of artificial intelligence to identify fraud patterns across multiple sectors. Could AI-powered fraud detection become a global standard? Singapore's Shared Responsibility Framework, SRF. Singapore is also making waves with its Shared Responsibility Framework for phishing scams. Starting in December 2024, banks and telecom providers in Singapore must meet specific guidelines to avoid financial liability. This includes cooling off periods, real-time fraud surveillance, and more. But there are limitations. The framework only applies to phishing scams and excludes other types of fraud, like investment and romance scams. Singapore's approach is a great example of collaboration between sectors, but it also highlights the complexity of addressing fraud comprehensively. Predictions for 2025. So what can we expect in 2025? Here are some key predictions. From Europe's PSD3 to potential legislative changes in the US, the global focus on fraud prevention and consumer protection will only grow. Advanced fraud detection systems using behavioral intelligence will become the norm, and we'll likely see more collaboration between banks, telecom providers, and regulators worldwide. And let's not forget about education. Consumer awareness campaigns will play a critical role in reducing fraud risks. After all, prevention starts with knowledge. Fraud is an ever-evolving challenge, but with the right policies and technologies, we can stay one step ahead. What are your thoughts on these changes? Are they enough to protect consumers? Drop a comment below and let us know. Don't forget to like, share, and subscribe for more insights into the world of finance and fraud prevention. Stay informed, stay protected. See you in the next video.